right, good morning. Welcome to the Church360 Ledger Chart of Accounts and Budgets webinar. My name is Jordan Bogart. I am a software support technician with Concordia Technology Solutions. I'm approaching my 11th year here, so I've been here for a little while now and very familiar with all of our products and here to talk to you today about Church360 Ledger. If you'd like to reach out to me, there's my contact information. So if you have questions, you want to give me a call with questions, either way, you can get a hold of me that way. I do want to let you know that all phones and microphones have been muted. So if you're trying to respond to me by talking, unfortunately, I'm not going to hear you. But we have our questions window. And if you do have any questions, hold on here. So, you know what? Let me go ahead. I realized I was not sharing my screen. I'm going to stop. Good morning. Welcome to the Church360 Chart of Accounts and Budgets webinar. My name is Jordan Bogart. I am a software support technician with Concordia Technology Solutions. I've been here for almost 11 years now, and so I've had a lot of experience in working with all of our products, but today here we're focused on the new version of Church360 Ledger. If you have any questions after the session and you'd like to get a hold of me with those questions, you can do so. You have my email address there and also my phone number. Either way, you can get a hold of me. And I do want to mention also, all phones and microphones have been muted for today's session. So if you're trying to talk to me to ask any questions, unfortunately, I'm not going to hear those. But we have our questions window where you can ask any questions that you may have. And joining me today to help answer those questions is my manager, Rod Kiles. He has been here for over 20 years at this point. So he is very knowledgeable about all of our products here. And so if you'd like to get a hold of Rod, here is his contact information if you're interested in reaching out to him. Okay, so what do we have on the agenda for today? Well, basically we break these webinars down into three parts: discussion, quiz, and Q&A. Now, I want to mention with the Q&A, really ask your questions anytime you're able, you have them. Again, we're going to get those answered for you in the questions window. But I want to go ahead and kind of give you a breakdown of what we're going to be looking at. It's kind of some, and then we're going to talk about, just talk about books and finance. We're going to do a little bit of need to know. We're going to talk about each of the account types here. Church360 Ledger, maybe a little bit of a foreign concept to you, but hope to help you decipher that today. And we're also have a newer topic here that we've introduced that I think is going to be very helpful to you in arranging your chart of accounts. We're also going to spend some time talking about budgets today. So setting up your budgets, working with budgets, we're going to talk about all that. So with all that in mind, let's go ahead and get started. So I'm going to go ahead, I'm going to turn off my camera so we can focus in on what's going on here on the screen. And let's go ahead and kick things off by talking about a few basic accounting principles. So the first thing I want to talk about today are books. What is a book? Well, a book is a self-balancing set of accounts with its own assets, liabilities, income, expenses, and fund balances. So I like to say each book is kind of an island unto itself. Most churches typically only have a single book. Most churches, there's really not a reason to have more than one. Sometimes I'll hear from churches say, well, we have multiple bank accounts. Well, unless they're truly separate financial entities, like let's say you run a church in the school that really keeps its finances mostly separate, a second book typically isn't needed. Now, that's not to say you might not have multiple books. And with books, it's important to understand that transactions only occur within one book. You can't take an account from one book and an account from another book and use them in a singular transaction. So really, any transfers between books typically are considered to be a loan that is to be paid back between books. Like if the church is giving some money to the school or vice versa, typically that's a loan to be paid back. Now, in order to get a little bit better understanding of books, I want to go ahead and switch over to the ledger here, and let's talk about how we get to our books. Now, during the course of these trainings, I'm operating under the assumption that you are an administrator of Church360 ledgers. You'll have full access to do and see everything that I'm talking about here today. That may not necessarily be true for your level of access, just depending on how things are set up at your church. So I do want to take even a quick detour before we get to the books. I'm going to go over to my settings gear. And if you would need to set up additional users or change access for users, you would go into your settings as an administrator. And if you go to logins, you get to control who has a login to your Church360 website. You also have the roles section here. And in the roles section, you can go ahead and you can set up different levels of permissions you can provide to these logins. And so for ledger specifically, there's a ledger section, and that would control what a person would have access to with their role in Church360 Ledger. So I'm not going to go into extreme depth about this today. This is something we do cover during our onboarding process when you're first getting started with Church360 Ledger. But of course, if you have any questions, get in touch with our support team. We're more than happy to help you out with that. All right, so let's get back to what I was talking about, which is books. So again, here under the settings gear, I'm going down to Ledger and then books, and we can see a listing of all the different books that we have in Church360 Ledger. And the site I'm using here today, I only have the single book, and that book is just called General Operations. The name of the book is just generally what you consider your chart of accounts. Most churches will just have this name like General, or maybe the name of their church. It's up to you on what you'd like that to be called. If you would like to add a new book, there's a button here that says Add New Book. And you would put in the book name, save it, and that would create that new book. It would be completely blank starting out, so it's a blank slate to work from. Once a book has been created, you can come here to the right, and there's 3 actions that you can take. You could edit the book, which would just let you change the name of the book. Okay. You could archive the book. Now, a lot of churches, maybe they're coming from other software, Shepherd Staff, or maybe the old version of Church360 Ledger, and there's some things you'd maybe like to clean up. That maybe you had multiple books in the past, but you don't really need those anymore. Well, we wouldn't let you totally delete them because they're going to have information in them, but there is an option here to archive a book. And when you archive a book, the system will tell you when that book was archived. And when a book is archived, basically you can't really do anything with that book. You can view the information inside of it, but you wouldn't be able to add new transactions, add new accounts, things like that. So it kind of just is an archival copy of that information. If you decide later, hey, I need to bring that back because we're going to start using that book again, you'll notice there's a button here now in place of the archive button that looks like an up arrow. When I click that, that unarchives the book. Simple as that. So this kind of tells us a little bit about just how we create a book. We can also see additional details about a book here when we click this arrow to the right, and this is going to tell us some information about our fiscal years. So I do want to go back to our PowerPoint for just a moment, and I want to talk about finance years next. So every set of books runs on a finance year, and a finance year is always going to consist of 12 consecutive months. Now, that doesn't necessarily have to be just in January to December. It could be, let's say, August 1st through July 31st. So you can go either way you want to with that. Typically, a finance year, though, is referred to the end date of the end year. So let's say you do run on August 1st through July 31st. Well, once you would get to August 1st of this year, you would be in your 2026 fiscal year because July 31st of the next year would end in 2026. So that is a finance year. And so with a finance year, it's just kind of a look at what happened in that time period with your accounts. So let's go back to our website here, and let's take a look at what's going on here within our finance year. So it's going to tell you what your current finance or fiscal year, you can almost use those terms interchangeably. It's going to tell you what your current finance year is. And then over here, we have book settings, where this is where if your church would decide that, we're maybe changing from a calendar year to we have a school as well, so we want to run in conjunction with the school. So maybe our fiscal year ends at the end of May and it starts at the start of June. So we could go here and say, well, our ending month of the current fiscal year is going to end in May. So that way, when I select this and click update, when I would go ahead now and do that here, this would go, this would end our fiscal year then, and our new fiscal year then would start in June. So when I click update, that's how that would work there. Okay, so if you would want to change, most churches don't typically do that. Most churches, once they have a fiscal year, they're set with that fiscal year, but you have the option if you'd like. Below that, we have our history section, and this is going to show us the history of our finance years within Church360 Ledger. So I have data in Church360 Ledger dating all the way back to 2014, and it's going to show us the fiscal year, when that fiscal year ran, so you can see all that there, and then the status of the fiscal year. And you'll notice here, when we look at the status of the fiscal year, there's kind of three different things we're seeing. So for 2025, we are saying this fiscal year is unlocked. Your current fiscal year is going to be unlocked. This is the year that you're working in right now. You're able to enter transactions within this fiscal year. You're able to make changes to transactions. You can set up, kind of just work normally with your books. Now, 2024, you'll see, is locked. When a year is locked, like we see here where we have the switch, this is saying that we cannot at this time make any changes in this fiscal year. I can't add new transactions. I can't edit transactions. I can't void transactions. It is locked at the moment. But because I have a switch here, if I needed to make any change in this fiscal year, I would still have the option of doing so by clicking this, and that would unlock the fiscal year. You'll notice when I did that, you see it says changes saved. And then I would be able to go back, and now I could create transactions in 24. I could edit transactions. I can make changes that I would need to make. Typically, you shouldn't need to do this too much, but especially when you're getting towards, when you're in between fiscal years, especially like, you're in January, you might be kind of moving back and forth. You may need to lock and unlock this here. Now, with a fiscal year, I want to mention some timing of a few things. With a fiscal year like your 2024 fiscal year, this was still unlocked until the end of March of the current fiscal year. At that point, the system does automatically switch this to lock, but you still have the option to unlock it. So this is what we call temporarily locked still. If I go down to 2023, you'll see I don't have that switch anymore. This is because this has become permanently locked. At a certain point, we say, you really shouldn't be going back that far to make changes anymore. And so how we treat that then is with a year that has become permanently locked, a year becomes permanently locked 15 months after the end of that fiscal year. So I could still, between January and March, actually go back and unlock 2023 and still make changes. But 15 months after the end of the fiscal year, we go ahead and put that final lock on there, and that becomes permanently locked. Now, that doesn't mean you can't view reports, you can't view transactions from that time. It's just that you can make no further changes to that fiscal year. And so we just do that again to kind of protect your information, so we don't have major shifts that we're not expecting in reports because we've changed balances from multiple years ago. So that is why that's kind of how the different fiscal years lock and unlock. And so I wanted to just speak on that just a little bit. Okay, let's go back to our PowerPoint here now, and let's talk about the concept of cash accounting. So we talk about different types of accountings. We're usually talking about two types of accounting: cash accounting and accrual accounting. And Church360 Ledger can most closely be described as a cash accounting system. Most congregations work on a cash basis or a cash accounting basis. What does that actually mean? Well, income is recorded and recognized when the money is received. So you wouldn't put that you received money until you actually have that cash or cash equivalent in hand. It's the same way with expenses. You wouldn't record and recognize that expense until the money has actually left your bank account. And we do this because this is just an accurate representation of what's really happening. In an accrual system, you might put in those income and expenses ahead of time if you know you're going to be spending that money or you know you're going to be bringing in that money, but you don't actually have it. So why do we operate this way? Well, it's safer. You won't run into cash flow problems when several accounts come due at once. You're only paying things when they are to be, you're only showing the money coming out of your accounts when they actually come out. You're only showing the money coming into your accounts when you actually have it. So it's easier to track how money comes and goes out of the church. And also, it's easier to explain balances to the congregation and church council. So the whole concept of cash accounting, again, I like to say you're really just showing what's happened in the real world when it happens with cash accounting. Now, I also want to talk about the concept of double entry bookkeeping. Now, what this means is when you start entering transactions into Church360 Ledger, there will always be at least two accounts on every single transaction. And that's because there are debits and credits to every transaction, and those debits and credits have to balance. So we have a good example here. When a deposit is made, money goes not only into an asset or your, let's say, your checking account, but it also goes into an offset account or a tracking account that shows where the money is from or what it was for. I like to think of it like this: where is the money going and how did the money get there? So we can, when we enter transactions that way, we can kind of get that sort of general concept in mind. Now, another important piece to understand about accounting here is the accounting equation. This is kind of at the root of all accounting here. So this is an important concept, whether you realize it or not. So at its core, the accounting equation is simple. It's your assets, what you own, what equals your liabilities, what you owe, plus your equity. What is the percentage of what you actually own? Okay, so basically, we're looking at that. Now, we can expand that concept here. So let's go ahead and expand it out just a little bit. Your assets equal your liabilities plus your equity plus your income less your expense. Okay, so we're taking it one step further now. We're saying, okay, what we own is equal to what we owe plus the percentage of, basically the percentage of what we own then, plus what we brought in less what we spent. Let's take it one step further. Assets equal liabilities plus our equity plus our income less our expense plus our funds. And funds are a concept we talk about where basically we have money set aside for specific purposes. Now, again, that concept may still seem a little bit fuzzy. I'm going to hope to bring it into view for you. But one place you can see that in action here, where you can see some numbers, let's again go back to our ledger, is right here on the overview screen. This overview screen actually shows us the expanded accounting formula that we have here, and it shows it with your numbers that you have in the system. So you have your assets, which equals your liability, plus your equity, plus your income, minus your expense, plus the balance of your funds. So if you would add all these up, liabilities or funds, that would equal your assets. So again, this is just showing how your system is in balance here, because it's a dual entry bookkeeping system. Everything has to be in balance. It's a scientific concept of no matter could be created or destroyed. Well, this is what we have going on here. It's more of an accounting idea. No, nothing can be created or destroyed. It's just kind of a balance of shifting things here. I do want to show just briefly here this overview screen. This is a great kind of central hub for Church 360 Ledger. We have a few things going on here. We have our to-do items. This is where if Church 360 Ledger needs to make you aware of anything, like if you have any pending transactions that have come due, if you have any offering batches that are coming over from our offering side of things, if you have anything coming over from there that you need to process, you'll see it here. If you have any checks you need to print, you'll see it here in the to-do items. So this is just a great way of the system letting you know, hey, here's some things that need your attention. As you can see right here now, it's talking about some things with payees and maybe need to generate a 1099 for them, and we'll get more into that when we get to our reports training. It also shows us some brief information about our income and expense at a glance. So it's going to show us what we've actually brought in and what we've actually spent for the year, what we budgeted for that time period, and are we running ahead of our budget, are we running behind our budget, and it's going to show us the percentage of budget that we're utilizing here right now. So it looks like I'm a little behind this year on income and a little over on expense still yet. We're also going to see top accounts, and this is basically the balance of some of our most active asset and liability accounts here. And you'll see the balances here, and we're over here in active. If you click on these, you can get to a ledger for these individual accounts. Another thing we'll see here is our top funds. Again, talking about the concept of equity-backed funds, which we're going to dive into again in just a few minutes. And it's going to talk about kind of our most active funds in the kind of the same way the top accounts screen did for our assets and liabilities. Okay, well, the next thing I want to dive into is our chart of accounts. So let's go ahead and talk a little bit about assets here to start off with. So assets. Well, very simply, assets are a resource with economic value that your church owns or controls. We can kind of think about these in two categories. We can think about current assets or monetary assets, and this is like money in your checking account, saving account, short-term investments, stocks. So anything that you can readily turn into liquid cash that you could use to spend on whatever your church might need. Now, the other part of this might be your fixed assets or your non-monetary assets. These are going to be things like your buildings, machinery, vehicles. I will say that most churches I encounter, they're mostly focused on their current assets in ledger. It's not to say that you couldn't put your fixed assets in ledger. In fact, I see multiple churches do that. But most churches typically focus on just their monetary assets when it comes to recording in ledger to keep track of just kind of, again, more of the day-to-day activities of your church. Again, you're not restricted to just putting the monetary assets in, but again, it's what I see from most churches. So going back to ledger, let's go over to our chart of accounts and let's take a look at our assets. So here I'm here at our chart of accounts, and I am seeing up at the top here our assets section. Now, before I do that though, just a quick introduction to the chart of accounts screen. Up here at the top, this is where you would add new accounts to your chart of accounts. If you have any accounts that have been archived, they are hidden by default, but if you click the Show Archive button, you would see any accounts that have been archived, such as this inactive asset account I have over here. So you would see those show up, so you can show and hide those. If you're searching for a particular account where it says Filter By, you could start typing in an account name. So if I go ahead and start typing in state here, you can see, oh yeah, it pulls up that state income tax liability account I have. I'll just get rid of that here now. Well, maybe refresh. Oh, just took a second to load. I was being a little impatient. That's on me. But you would go ahead and do that there. You also have the option to print this chart of accounts out. There is an export feature to export this out to an Excel spreadsheet. We also have the ability to import in a chart of accounts as well when you're first getting started. And that's something, again, in the onboarding process, we can assist you with if you're coming in from a system that's not Shepherd Staff or the previous version of Church360 Ledger. So lots of options for you there. Now, looking here at assets, I have kind of a mix of different things here. Again, mostly monetary assets. So you can see all those different assets I have here. What if I wanted to add an asset? Well, I would click Add to Chart, and I'm going to go ahead and I'm going to name my account. In the case of monetary assets like bank accounts, usually the naming convention I like to use is the name of the bank and the type of account. So let's say I have an account at First Bank. So I'm going to go ahead and call this account First Bank Checking. Okay. Next up here is an account number. Now, the account number is optional. However, many churches like using account numbers because it helps them just kind of organize their accounts. The system does not do any sort of account numbering for you. Account numberings are not really used in the organization of your accounts. But again, if you want to put an account number in, you can absolutely do so. So let's say all of our asset accounts start with 1,000. So let's go ahead and say this is asset account 1003. Okay. Next, where it says create account under, this is where I'm selecting not only what type of account I'm creating, but does this account go under another account? So if I want to create a new account at just the top level here, I just want to create a new asset account, it's not under any other accounts, I would just choose assets here, and that's going to let me start building an account. But let's say here, if I go back a step, go back here, let's say I was adding another account, adding a checking account at Farmers Bank. I want to place that under this Farmers Bank category here. So what I could do is I could go ahead and add to chart. And instead of saying First Bank, let's go ahead and say Farmers Bank. So we're going to say Farmers Bank checking. Okay. I can put an account number. Let's go 1003. And then let's say I want to go down here, and if I scroll down, you can see these different accounts here that have, basically I could place accounts under. This is a concept we call parent accounts. These are parent accounts, and parent accounts have children. Okay, so if I put in, so I want this to go under Farmers Bank. I'm going to select that here. So when I create this account, now it will go under the heading of Farmers Bank. The next thing I would do is I would set an initial balance on this account. Now, when you're setting an opening balance on an account, you get to pick when that opening balance is as of. So if you want the to go back to the beginning of your current fiscal year, in our case January 1st, you would choose beginning of this year. If you're entering in a balance as of the beginning of the current month that you're of the month that you're in, you would choose beginning of this month. If you want to start as of today's date, you could choose today. Or if you want a custom date of your choice, you would choose other, and you can pick the day that we are putting in the initial balance of this account. What that means when you put in the initial balance, you cannot create transactions that are prior to your opening balance date for this account. So bear that in mind. We're going to go ahead though and say this is going to be starting at the beginning of the year, and then it'll tell you down here balance at the end of December 31st, 2024. In other words, balance at the beginning of the day, January 1, 2025. So your ending balance, this is going to ask for your ending balance for the day previous to your initial balance. So let's say we're starting off this account with, let's say $10,000. Okay, so we're going to go ahead and put in 10,000 here. And then there's a few selections that determine how this account behaves. Should we be able to write checks in this account? If we want to be able to write checks in this account when we enter in transactions, if we want this to be a choice for our asset account we can use for checks, we would check this off. Do we want to allow making payments to this account? It's a very similar idea. When we enter in payments, which is another transaction type, do we want to be able to select this as the asset account? So we'll say yes to that. Finally, allow entering a reconciliation for this account. So when we go through the bank account reconciliation process, is this account an account we can do the bank account reconciliation process for? If you want to be able to do that, again, we check that off here. Now that we've done all that, we'll click Save. And this is going to go ahead and create the Farmers Bank checking. Now, I want to dig in just a little bit more into the parent and child account concept, because you notice there's multiple levels of parent and child here. And so you can see that we have, Farmers Bank, and then at level 2 we have savings, but also at level 2 we have money market, and then at level 3 we have Farmers Savings Account. So Farmers Bank is a parent account of its child account savings, which savings is a parent account of Farmers Savings Account. Then at that point, so it is a child of that. So it is a kind of a family tree. Now, you'll notice that when I created Farmers Bank checking, I didn't place that under a category called checking. And I said, yeah, well, maybe I'm going to be able to do that. Well, I can do that. So if I add the chart here, let's add an account called checking. We're going to create that account under, if I go down here, let's create that under Farmers Bank. We're going to put in the balance at the beginning of the year, but it's going to be 0. And I don't want to allow writing checks to the account, making payments to this account, or entering a reconciliation for this account, because when we create transactions, we're not going to be creating it from this account called checking. We're going to be creating it from Farmers Bank checking instead. So I'm going to save this here. This is going to create that kind of second level account called checking under Farmers Bank. And now if I want to take this checking account that I've already created and move it under, if I want to take this Farmers Bank checking that I've already created and I want to move it under checking, what I could do is I could come over here to the right and I click this pencil button to edit the account. I could go in here and say, well, I want to move this account under, and let's go ahead and find checking here and save it. When I save it now, you can now see checking is under Farmers Bank Savings, and the total of these child accounts will roll up into the parent account, and that goes all the way down through. So this is how we organize our accounts, by creating parents and children. Now, an account cannot be a parent account if it has a balance in it. So this checking account didn't have a balance in it, and I could go ahead and make it a parent account, making the child account Farmers Bank checking, because it didn't have a balance. If it has a balance in it, you cannot make it a parent account. Now, I also want to show more of these buttons over here on the right. The pencil icon that you see here is to edit an account. When you edit an account, there's a few things you can change about it. So you can change the name, the account number, you can move the account, and you can write checks, payments, or reconciliations from that account. Let's back out here. The next button you see here, it's kind of hard to maybe see here, but it's kind of some circles with some lines next to it. There's a reorder button. This will let you rearrange the order of the accounts that you see at the level that we're talking about. So since I did this for Central Trust here, we could rearrange its children here on this at this account level. So I could go through here and I could rearrange the children of this account. Okay, so I wanted savings up here first. I can click up here and save it, and then after the page refreshes here, you can see now savings comes before checking, so you can rearrange the accounts. You'll see again that archive button here. If you archive an account, that's basically going here and saying, hey, we're not using that account here. But I do want to point out the system will not let you archive an account with a transaction within the current fiscal year, or that has a current balance. So you'll want to be mindful of that. Accounts need to be zeroed out before they can be archived, and they can't have any transactions within the current fiscal year. If we look down here on some like this non-bank account, this is an account that's never had a transaction placed against it. It doesn't have a balance. So if I don't need that account, the trash can icon here is here, letting me know I can just delete that account if I want to. Finally, if you want to drill down into an account and get more detail about it, there's this button here over on the right, this little just arrow pointing right. If we click on this, this is to view the account register, and this is going to let me see more details about the account. So it's going to let me see a transaction register, We have the ancestry section to see kind of where it lies with its parent accounts then. So I could go up a level and you can see kind of where that all stands. And then if you go to charts, this just gives you a visual chart of changes over time in that account. If the account is enabled for reconciliation, you would have a fourth tab here where you would do your bank account reconciliation as well. So that should cover our assets here. Let's go ahead next and let's talk about liabilities. So let's go ahead and go there next. So what are liabilities? Liabilities are any debt your church owes to someone else. Again, liabilities fall into two categories. There is short-term debt, and short-term debts are going to be things like accounts payable, payroll taxes, offerings for other congregations that you've taken up. Another example of this might be if your church has a credit card, you would set up a liability for a credit card. Now, you might also have long-term debts. So, and one thing to mention about the short-term debts, we call a liability for a credit card like a charge account. So, if you have a liability for a credit card, consider it we consider it again a charge account. Now, another way you might use liabilities is for long-term debt, and that's going to be things like mortgages, bank loans, automobile loans, things that's going to take just a little bit of time to pay off. It's not something you're necessarily going to have paid off at the end of the month. So that's the kind of two classifications of liabilities. Let's head back over to Ledger here. And let's take a look at our liabilities. So I have some liabilities set up, and most of these are going to be short. And what I have set up right now are all short-term liabilities. There's no functional difference in the system when you're creating an account to say if the liability is long-term or short-term. It's more just how those accounts are used. So I have a section here called payroll tax deductions. So when I'm entering payroll into the system, there might be deductions I have from employees' checks that I would put in here. And when I put in these deductions from the employees' checks, these liabilities kind of absorb those different deductions for us then to pay out later. We also have like different things like payroll deductions, which serve a similar purpose. But again, if I wanted to add a new liability, you could certainly do so. So I would click add to chart. And let's say we need to go ahead and let's put in a credit card. So I'm going to go ahead and say, let's say Farmers Bank credit card. We'll call it. Again, account number if you would like one. You don't have to put one in. And then when we do create account under, again, if I want that at just the top level, I could say liabilities, or I could go under the liabilities category and place it under a parent account that we have for our different liabilities. In this case, I do want this to be at the top level, so I'm going to select that here. Now with a liability, you can also start that off with an initial balance. And again, you have the same sort of choices. Is the balance as of the start of the current year? Is it the beginning of the current month? Is it as of today, or is it for another date? We'll just say this one goes back to the start of the year. And let's say we had our credit card paid off at the start of the year, so we'll start at $0. Now, with a credit card, I want to be able to say that I'm making payments against the credit card. So like when I want to use the credit card to pay for something, I can use that in place of an asset. So I'm going to turn on the option here that says allow making payments in this account. Now, again, an option that is useful if you're creating a liability for a credit card is allow entering a reconciliation for this account, because then once you get your credit card statement, you could do a reconciliation just like you would do with your bank statement for your bank accounts. So this would give you that option. I'm going to go ahead and save this. And once I have saved this, now you can see if I go down, I now have Farmers Bank credit card as a liability. All right, so that's liabilities. Let's go ahead and let's move on to talk about income. We're going to skip over equity for now, but we will come back to that. So what is income for? Well, income records revenue received in the current fiscal year. These are budgeted accounts. You would be able to budget these accounts. Some examples of income might be your offerings, interest earned on accounts, rental property, One important part to realize about income, though, is the income zeroes out to the retained income account at the end of every year. So income balance does not carry over from year to year. And that's because income is only intended to keep track of what you brought in through the current fiscal year. It's not something you're maintaining from year to year. Now, knowing that, let's take a look at creating an income account. So again, we see a list of our income accounts. We have a lot of different things here, all different, all sorts of different things. Let's say I wanted to add a income account for our children's ministry. We have music, men, young adults, women's. Let's get a children's ministry in here. So if I go ahead and add a chart, I have the account name. We'll call this children's ministry. Do an account number if we would like, and then select account under. Now again, if I wanted to create that at the top level, I would just choose income, but we have a ministry category I'd like to place this under income. So if I go down here and choose ministry, the only option we have to turn on or off for this is to allow entering a budget for this account. One request we got a lot with the previous First and Ledger is, well, maybe I have some non-budgeted income accounts or non-budgeted expense accounts. If there is a situation where you have an income or expense account that we don't want on our budget, you could uncheck this box and that account would not be available then for you to apply a budget to later if that's a situation that you're in. So we have that. You can turn that on or off as needed. By default, that will be turned on because, again, most income accounts are going to be budgeted. So if I save that, that is going to go ahead now and create my income account for the children's ministry. So I go down, you can see now we have children's ministry. Simple as that. Okay, moving on next, let's go ahead and talk about expenses. So expenses is, I like to say, it's really just the flip side of the coin from income. If income is tracking what we bring into the church, expenses is tracking this what's going out of the church. So it's tracking church spending in the current fiscal year. Again, these are budgeted accounts. And here, we have a few examples here. So things like salaries. We have things like materials for church programs, office supplies, postage, utilities. The list really goes on and on. But I would say by far, for most churches, expense accounts are going to be what you have the most of because this is all the different things you might spend money on. Again, just like income accounts, these zero out to retained income at the end of your fiscal year. Because again, it's meant to track your spending on that particular item through your current fiscal year. So that's what an expense is for. Adding an expense works very similar to adding income. So let's say, we have a kitchen at our church. We have different kitchen supplies we might need. So I want an account called Church Kitchen. So we're going to go ahead and put in Church Kitchen. Go ahead and create that. Again, you can put an account number if you'd like. Let's see here. Is there a good category this could go under? Let's go ahead and let's put this under miscellaneous for now. So we'll put that under the miscellaneous section of our expense section. Again, we can say if we want to allow a budget for this, and we'll save it. And when we do so, that's going to create the church kitchen expense account. So when I'm spending money on things for the church kitchen, I can now put that against the church kitchen expense account so we can see what we're spending on things for the church kitchen. So we can see the church kitchen, on here, right down there. So there it is. All right, so that's the expense account. All right, I want to double back now and I want to talk about equity. So equity is a concept that can be sometimes a little difficult to understand, but to understand it basically, the value of church ownership in an asset is your equity. So think of it this way. Let's say you have $1 million mortgage for your church and your church has paid off $600,000 of that mortgage. Your equity in your church building then becomes $600,000. You have paid off $600,000 of the $1 million that you owe on the church. So then your liability, in essence, for that one building would be $400,000. So you own $600,000 of your $1 million asset. That's what equity is. It explains how much your church owns of its assets. So some examples of equity are book equity and retained income. And these are special equity accounts that we have in the system. Before you create a single account in Church360 Ledger, you are going to have book equity and you're going to have retained income. And I should explain what both of these are. So book equity is, in essence, when you start Church360 Ledger at its simplest level, it's the value of all your assets less the value of all your liabilities. Simple as that. Now, book equity will change based on a few different things. When you're establishing equity-backed funds, you're going to be pulling for book equity to get the initial balance. So that will cause book equity to decrease. Also, at the end of each fiscal year, your book equity will change due to the next account as well, which is retained income. Retained income is your total income for the year less your total expense. So at the end of every year, you might remember that I said income and expense zero out to the retained income account at the end of each year. Well, what we do is at the end of every year, automatically, Church360 Ledger does this for you at the year end. It will take the balance of all your income accounts and add that to the retained income, but then take the balance of all your expense accounts and subtract that from the retained income. So it's the net of what you brought in each year. So if you ended up spending more than you earned, your retained income goes down. If you end up bringing in more than you spent, your retained income goes up. Now, I mentioned that retained income affects your book equity because what happens at the end of every year is we take your retained income from the previous year and that gets added to your book equity, and then your new retained income becomes your retained income from the last fiscal year. So that is kind of the general process of how your equity changes each year. Now, all of this to say, use of equity accounts is not required. The only thing, the system can take care of equity for you really without your intervention. The system will kind of do that as a balancing factor. Now, you can add additional equity accounts, but we really only recommend doing that under the supervision of a CPA. If they tell you, hey, we need an equity account to track the balance of like an investment or something like that, and they say, equity I think would be the best way to do this, you can do that. You could add an equity account. But for most churches, the book equity account and retained income equity account are going to be the only equity accounts that you have. So just wanted to explain equity. I'm not going to be adding in any additional equity accounts today, just because, again, most of the time that's not going to be much of a concern. Now, let's talk about funds. What are funds? Well, when we talk about funds, we need to talk, I don't know how many of you are coming from the previous version of Ledger, but we had a concept called restricted funds in the previous version of Ledger. And the purpose of funds are to keep track of money that your church has set aside specifically for a certain purpose. So let's say your church has a special fund for memorials. Now, you don't have like a true separate bank account for it, but you're saying, well, amongst all the assets for our church, we have, let's say, $15,000 set aside for just memorials. We should only be spending this money on memorials. That's what a fund does. Now, in Church360 Ledger, the previous version of the system, we used restricted funds for this. And how restricted funds work, where you were saying, well, I'm taking a portion of one of my asset accounts and saying we are holding this money within that part of the asset account. We're saying of the $50,000 in my checking account, $15,000 are set aside for just the memorial account. So with that in mind, assets, they're categorized for a specific purpose. they can't be budgeted, and the balances carry forward to the next finance year. Now, when we moved the new version ledger, we took a look at this process and we said, I think we can do this just a little bit better. So that's the new concept of equity-backed funds. So equity-backed funds are their own independent set of accounts. Balances in equity-backed funds, balances are held in an equity account. Now, I know I just said, well, you don't have to create equity accounts. Well, funds are a part of equity, but they're separate from equity at the same time. And I'll show you that and explain that. So these equity accounts, again, they're used to say we have money set aside for a specific purpose. Equity is categorized, for that specific purpose. One advantage to equity-backed funds is these can be budgeted if you would like. You don't have to, but you can budget these if you like. And just like restricted funds, balances are going to carry forward to the next finance year. So let's talk a little more about equity-backed funds, how we do things here in the new version ledger. When you create an equity-backed fund, you're creating really a group of accounts. Every time you create one, it's going to create a self-contained equity, income, and expense account. So you would have your memorial fund, and that group the group would be called memorial fund, and under that group you would have equity. You would have equity for memorial fund income, and memorial fund expense. How you get your initial balance into these equity-backed funds is you would transfer money in from your book equity. So again, some examples of equity-backed funds, you would have like a building fund, a memorial fund, a fund for world hunger. So I know this might seem a little abstract so far. Let's put this into action and let's create an equity-backed fund. And I'll even give you a little glimpse ahead about our transactions training. I'm going to show you putting a balance into an equity-backed fund. So we're going to go back to Ledger. And let's say we want to create an equity-backed fund for our youth mission trip. Maybe let's say every year we have a youth mission trip and people donate to that, and we want to set that money aside so it doesn't get spent on something else. So I'm going to add to our chart. We're going to create the account name for this is going to be our youth mission trip. Okay. Again, I can do an account number if I'd like, and I'm going to create this under funds. Now, if you want to be able to budget for create a budget for this account, you can do that. Check the box here. That would allow you to have this included on your budget. Now, we'll go into more detail about that when we talk about budgets here shortly. Also, there's a designation here that says this is donor restricted. This is a special designation that some churches make that's saying no matter what, unless the church puts it up for a vote, we cannot use this money for anything else. So that's what the donor restriction is. It's just kind of a special flag in the account that says, hey, you can't use this for anything else other than the youth mission trip unless the church votes on it and says, okay, we can release this money to something else. So we're going to save that. And once we've done that, if I go down to the very bottom of my chart of accounts now, we now have youth mission trip. And you might remember, again, I said it creates a group of funds. So I have youth mission trip right here. This is the name of this group of funds. And there I have youth mission trip equity, youth mission trip income, youth mission trip expense. Now you'll notice that when I created the account, I didn't get an opportunity to say this has an initial balance in it. So I need to put an initial balance into this if I had money starting out in this account. How I do that is I would do a transaction transfer. And again, this is a little bit of a sneak peek to our training tomorrow when we talk about transactions. Let's say I'm putting this balance in as of the beginning of the current month, and I need to take money from my book equity. Let's say we had $500 in this account to start with, and I can put in the description, so that we can put in an individual line description, but next here, we're going to do our youth mission trip equity. So we're taking money from book equity and transferring it to the equity portion of our youth mission trip. And we'll just say the memo on this transaction is initial balance transfer. Okay, we're going to save that. And this shows us our saved transaction now, but we'll cover that more during our transactions training tomorrow. But now if I go down to my equity account, my book equity has been reduced by $500. And if I scroll all the way down to our Youth Mission Fund, you can see now in equity there is $500 in our Youth Mission Trip equity, which means we have a $500 balance in our Youth Mission Trip. So how the balance of a fund is calculated is we take a look at the equity of that fund, we add in the income, and we subtract out the expense. And that should sound a little familiar to you. We talked about our equity accounts because what at the end of the year, just like you had with retained income and book equity, the funds work as sort of as a miniature version of that. At the end of every year, we take all the income you had in your youth mission and this youth mission trip account, we add it into the equity. We take all the expense that we had in the youth mission trip and we subtract it from the equity, and that then becomes the new balance of the equity account, which in turn is the balance of your fund. And then you move on to the next year. So that is how we keep track of what you might have had as restricted funds before now become your equity-backed funds. So that's a look at our chart of accounts. I want to spend also a little time today talking about budgets. So if I click here on budgets, this is going to bring us to our budget screen. And when I get to my budget screen, I already have a budget filled out here for my accounts at the moment, but I am looking at my fiscal year 2025 or my current fiscal year. Now, up here, you'll see there's a change button. If I wanted to work on a different fiscal year, I can look at, if I want to look at a different fiscal year, I could go in and I could choose any of my past fiscal years, and we always let you select your next fiscal year so you can start planning your next year's budget whenever you're ready, which apparently I was already ready there. So we already have that planned. So you can choose what fiscal year you want to work with here. Now, what we're seeing here when we look at our budget screen is you'll see some lines here in gray and some lines here in white. You can only apply budgets to child accounts that do not have children themselves. So you can see here we have the income category here, and then we have the parent account of offerings, which has a child account of funds, but that funds also has children of general fund, mission fund, youth fund, building fund, and unmatched funds. So and what's going to happen then is it's going to take the balance of all the children under it and roll that up into the total that you see here. So in this case here, if let's say I want to apply a budget to unmatched funds. Well, if I click here, this is going to bring up a sidebar where I can start entering in budget information. Now, when I'm here at the screen and I want to enter in budget information, you're going to go through and you're going to enter in month by month what the budget should be for each month of the year. So we're saying how much we expect we're going to be bringing in the unmatched funds account during the course of the year. Now, we do have some things to help you here. Let me go to an account that already has a budget in it. Let's go to the building fund. What you could do is you could tell the system, well, this actually didn't have a budget here, but you could tell the system, I click on this, copy what the budget was in the previous year, and you can see that I copied that all to zeros, or I could copy in the prior year's actual, or so basically saying, hey, here's what we actually brought in the previous year, and I click on that, and that will go ahead and bring in what we had in the previous fiscal year. Now, you'll notice when I did that, like it didn't bring in that negative 1650 here. You cannot set negative budgets. You can't say, well, we expect to negative in an account for a month. That typically just doesn't happen. So now we do have some tools to help you enter in your budgets here as well. So a few things going on. Actually, I should have stayed on an account that had a balance. So first thing up here we have is adjust by percentage. So let's say, again, looks like we have our prior year's actuals in here. Let's say, okay, we're expecting a little bit of an increase or decrease in this account by, let's say, to the tune of 5%. So we're expecting a 5% increase in this account this year. So I'm going to put in 5 here and click fill. Well, went ahead and this increased each amount I had in here by 5%. So you can see that went up all by 5%. Now, if that was supposed to go down by 5% instead, what I could do is I could put in negative and then 5 and then press the fill button here. And this would go ahead and it would decrease the balances by a negative 5%. So I can do that. I could also do change by, and this would say, well, I want to increase the budget on all these accounts, but by a flat amount across the board. So let's say I want to increase the balance on these each month by $100. So I put in 100 and then fill. Well, that would go ahead and increase the balance of these each by 100. You could also decrease by putting in a negative number as well. You also have the option, as finally, to say, I just have a flat figure in mind for all the months. I just want to set all the months to a particular figure. So this is great. I hear from churches a lot who say, well, I have an annual budget. I don't go month by month. What you could do is you could take that annual budget, divide it by 12. So let's say we have a $1,200 budget for this account. I could say, well, I want to set all that to $100. If I say fill, well, there we go. I have $1,200 then on these accounts. Now, when you're done entering a budget for the account, you have two options to save. If you click save, this will save your work and take you back out of the account. Or if I click save and continue, this will save the work that you've done, but then it'll advance you to the next account that you see here so you can continue working on your budget. So this will help you enter in your budget figures. Now you can enter in budgets for income accounts, expense accounts, and any funds that you've said that you want to be able to apply budgets to. When you're setting budgets for fund, you're setting an income budget and an expense budget for that fund. And the net of that, and the net of the income and expense becomes the budget for the fund then at that point. You also have the option to print this screen out. You can export it to an Excel spreadsheet. And once you've exported it to an Excel spreadsheet, once you've done the work in the Excel spreadsheet to put your budgets in, you could import that back in as a way of entering your budgets. So that is just a quick look at budgets. Okay, so we've covered our chart of accounts, we covered budgets. Let's go ahead and let's do a quick quiz to see if we've kind of retained everything I've been saying here. We have 5 questions for you here today. How this is going to work is I'm going to put a poll up on your screen where you'll be able to answer the questions. I'm going to see your responses that are presented. Don't worry, I'm not going to see your individual response. So no pressure here. You're not being judged or graded or anything like that. But we're just going to run through this quiz here. 5 questions about what we covered today. So starting off here, question number 1. This is a true or false question. A fund in the ledger module is the same as a fund in the offerings module. This is on me. I forgot to mention this. I apologize. I'm not actually going to send this one out. I forgot to mention this. There is a term called funds over on the Church360 member site, as the new version of Ledger is connected to Church360 member. A fund over there is not the same thing as an equity-backed fund over here. So I'll just go on to the answer here really quick. Of course, this is false. Funds in the offerings part of Church360 members are what people donate to, the general fund, the building fund, etc. A fund in Ledger is equity reserved for a specific purpose. You may not have an equity-backed fund for every fund that you have over in Church360 Ledger. In fact, I guarantee you won't. But they are separate ideas, separate purposes. So just want to make that clear, and I apologize for not mentioning that during my presentation here. Let's continue on, though. All right, this is one I did answer here. What type of account is used to create a charge account? So 3 choices here. I'm going to put the poll up on screen. So what type of an account is used to create a charge account? So thinking back to the different account types, we talked about different types of accounts, why you might use them. What would you use for a charge account? So I'm going to give everyone some time to answer that question. I see answers kind of rolling in here from folks. So I'm going to give everyone just another moment or two. Okay, I'm going to end the poll here. It looks like the majority said liability. So let's see what we have here. Well, the answer to that is, yeah, B. B, a liability account. A liability account is a account type you would use to create a charge account. These accounts represent credit cards and can be reconciled. So you would, again, you're generally creating liabilities to keep track of the coming and going of charges from a credit card, and so liability is perfect for that. All right. Next question up has multiple answers here. So, what types of accounts show what type of account allow the use of budgets? So let me go ahead and bring that up on screen. There are multiple answers to this one, so pick all the answers that are correct here. What type of accounts allow the use of budgets here? So go ahead and review those there. Pick what is correct, what you guys feel is correct. So what can you put in budgets for? All right, I'm going to give everyone just another moment or two. Okay, looks like most of us have answered. So I'm going to here. All right, so there are 3 correct responses here. Those 3 correct responses are equity-backed funds, income, and expense. All are account types that would allow you to have budgets. So to see how closely these budgets are being adhered to, reports, you can create reports within the financial reports section that will track the difference in actuals and budgets. Your income, expense, and equity-backed funds will have the option of appearing on your budget screen so you can apply budgets to them. Now, again, I didn't maybe fully explain this, but the reason you can set budgets for these types of accounts is because those types of accounts zero out at the end of each year. Assets and liabilities don't zero out at the end of each year, so you really can't apply a budget to those because it's just never going to quite line up. All right, next question. Will an equity-backed fund maintain its balance when the finance year is advanced? Will an equity-backed fund maintain its balance when the finance year is advanced? So true or false on this one, and let's go ahead and get into it. So thinking about equity-backed funds, how we use those, how we think about those. Is that going to maintain its balance when we get into a new fiscal year? Or new finance year? Same, one and the same. All right, give everyone just another second or two here. Okay, I'm going to go ahead and close this poll out. We had unanimous answers here. Everyone said true, and you guys are right on. An equity-backed fund will carry its balance over into the new fiscal year. The net between the associated income and expense accounts will be applied to the equity account at the end of the year. So yes, your equity-backed funds are going to maintain their balance, and that's part of the whole purpose of those. All right, one more thing to talk about. True or false? At the end of the year, you must run a year-end utility in Church360 Ledger to close out your books. So I want to think back to near the start of the training when I talked about the finance years and think about how we had kind of talked about those. At the end of the year, true or false, you have to run a year-end utility to close out your books. Is that true or false? Give everyone just another moment or two. All right. Looks like we're a little bit split on this one. Majority said false. So let's see. That is false. Church360 Ledger automates the year end for you. So let me just kind of walk through the basic process of what Church360 Ledger does at the end of each year. At the end of each year, retained income is zeroed out to your book equity. Income and expense accounts are zeroed out in the retained income account. So basically, this is how the system kind of balances itself at the end of the year to take care of the income and expense accounts. Now, 3 months after the end of the fiscal year automatically becomes, your previous fiscal year becomes locked, but it can still be unlocked. 15 months after the end of the fiscal year, though, it becomes permanently locked. So remember, you can still go back and work on your previous fiscal year, and even the year before that, in the first 3 months of your new fiscal year. But once you get past that 3-month window, your previous fiscal year is going to lock. You'll still have the opportunity to unlock it, and the year before that will become permanently locked. But again, Church360 Ledger takes care of all this for you. It doesn't require any intervention on your part. All right. Well, I want to thank everybody for attending today's Church360 Ledger webinar. I hope you guys learned something new, or maybe this is your first look at the new version of Church360 Ledger. I hope it was a good introduction for you. For any questions you might have, please email us at our support inbox, support@cts.cph.org, or you can also give us a call at 1-800-346-6120. If anyone has any lingering questions, you're kind of holding me in, now is a great time to ask them. I'm going to give everyone just a minute or two to ask your questions. If you don't have any questions, though, this is the end of the training, so feel free to go about your day then, otherwise. So just keeping an eye out here. Appreciate it, Dale. Thank you. Okay, just keeping an eye out for questions. I'll give everyone another minute or so if they're writing up a question. Doesn't look like anybody has questions. I'll take that as I got your questions answered. But otherwise here. Okay. Well, again, thank you so much, everybody, for joining us today. Come back tomorrow for our transactions training. I'll be hosting that for us, and we'll get into talking about transactions in Church360 Ledger. All right. If there's nothing else, you guys have a wonderful day. Take care. Bye-bye.